I'm Keith McCullough, and welcome back. So first we had Mike Green lead us off on a whole bunch of things, from passive to flows to options to corporate credit. Now I wanted to get the heavy hitter in on geopolitical, in particular on China, the Ukraine, etc. Kyle Bass, thank you for making the time.
Great to be here, Keith.
So you have in your background there, you have a flag, and it looks like an American flag, but it's not your typical American flag. Can you explain what that is?
I was blessed to be present by the late Senator Tom Coburn from Oklahoma, who happened to be a friend of mine. And this was the flag that flew over the U.S. Capitol building on the 10th anniversary of September 11th. So it's a prized possession, and it's a reminder of grand strategy and the blood, sweat, and tears that have democracy where it is today. So I tend to be someone that tries to focus on all of those things all the time.
That's a cool thing, man. I came to America, or your country, in the middle of the 1990s, and when I got here, first of all, I thought New Haven, Connecticut was the industrial mecca of the world from where I came. But I always loved the idea as a Canadian of American capitalism, of that free market nature to what it was. And back then, I have to say, it really was, I don't know about my feelings. I like to not talk about feelings when it comes to markets, but it certainly is something for a young Canadian man that it was very evident. And nowadays we have different definitions for different things. So I just wanted to thank you. Like you're one of the very few people who's willing to speak patriotically within the lens of proper American capitalism, and I think a lot of people should say thank you for that. So I wanted to do that.
I appreciate that, Keith.
Now, on the topic that I think people are expecting to hear something from Kyle Bass on China. Okay, so how about China, COVID? What are you thinking with China these days?
So this is something that we haven't talked about before, nor have I said, I think, publicly, but it may be thrown out as a fringe thought. But what I'd like to do is be a little provocative on the look back. Let's look back to the beginning of this virus. And Keith, what I think you're one of the world's best at is calling the ball and the strike passionately, but not emotionally, and understanding which one of the sectors the world's in and how to invest around it. What I like to do is think about why a specific pitch was thrown and what the strategy of the game was, other than just calling the balls and the strikes. And in this case, when we talk about COVID, just think about, again, whether it was intentionally made in the lab or released from the lab or accidentally released in Wuhan, however it came about, think about the timing of when it came about. If you remember China's current account was actually moving in the negative territory. And when you think about why, and you look at the different foundational building blocks of that current account, the Chinese citizenry were traveling around the world more. They were spending more. They were investing what they were allowed to invest in various Western nations, let's say under the laws. There were certain limits to the amount they could spend on their credit cards and spend abroad. But so many of them were traveling that there was a massive outflow of dollars. And when you think about China, there are two Chinas. There is the yuan-based China, which is internal, and then there is how China interfaces with the rest of the world externally, which is primarily in dollars, right? No one accepts their currency as legal tender for a great amount of trade, right? About 88% of their trade settles in dollars. And they have to buy things from the rest of the world to exist every day, right? They don't have enough energy. They don't have enough food. They don't have basic materials. They don't have enough base metals. They need all of those things from the rest of the world. They need to spend dollars. So interestingly enough, the current account was headed to zero or below zero at the same time that the protests in Hong Kong were at their zenith. And magically, COVID comes. And what does it do? It shuts down the Chinese populace from traveling abroad, spending abroad, investing abroad. At the same time, it enables them to quietly take over Hong Kong. Now, fast forward, and again, maybe that was just coincidental. And now you have the world was reopening prior to Putin's invasion of the Ukraine. And then Putin attacks the Ukraine at a time in which we've had 7 years of underinvestment in hydrocarbons due to the intense desire to flip a switch to go alternative energy. And crude oil, what does it do? It trades to $123. And within just a couple of days of crude touching 123 and food prices spiking, what happens next? The Chinese miraculously, they announced the closing of Shenzhen due to a COVID outbreak. Now, remember, China really didn't have any COVID outbreaks all along. They reported 5,000 deaths over a 2-year period, essentially unfazed by this global disaster that's killed over 6 million people. So miraculously, crude oil drops $20 in 5 days. And then crude trades back up from sub 100 to $117 a barrel. And right then, literally within 2 days, they announced the 2-phase closure of Shanghai. And crude drops another $20 in 3 days. And so when I think about China's grand strategy and what's going on today with the intense closure of now Guangzhou and several other cities in China that they're telegraphing all over the world, what does that do, Keith? Well, that makes Wall Street analysts say, oh, our China growth numbers aren't what we thought they were going to be. And the global demand side of all of the commodities from food to energy to basic materials is selling off every time they close a new city. I think it's fascinating. I think it's very well timed. I think it's potentially manipulative. And I think that the global press just seems to take these closures not even with a grain of salt. They report them immediately. They report it as truth, and then they move forward. And I think China got caught desperately short global commodities and is trying to do everything they can to slow down expectations to keep these prices low so they can acquire as many of them as possible.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content. You know what's really interesting about that? I mean, because literally, I doubt you watch the macro show. You got other things going on, but points number. I always do the top 3 things in the macro show. So the things that are moving today, that on the margin, in particular space, which matters in macro, it's the particulars that matter, not the average of things. The particular things. And today was really number 1 was China, number 2 was oil. Guys, you could show it. And hook, line, sinker, whether you're right or wrong, this guy said, oh, that's a China demand slowing point, and that when we were looking at this oil, drop from, it went from down 2% when I got up this morning to down 5%, 4 or 5%, and that really should change the calculus for a lot of people. A big difference between a $93 oil price, obviously, and a $123 oil price. So, that's a real interesting. What you're saying is that there's there should be at least considered a puppeteering of it all because you know how to move the big pieces. Is that essentially what you're saying?
Yeah, I think when you look at global demand, let's say global demand for crude, first of all, it's inelastic. The only thing that kills it is price, right? There's demand destruction at some point in time with price, but let's say it's 100 million barrels a day. Russia produces 11.5, exports 8. The U.S. is the largest energy producer in the world. Russia's second. But let's say, first of all, that at some point in time, Putin decides that he's behind and that he's going to use a chemical or weapon or a tactical nuke, and the U.S. ends up sanctioning their energy business. If we take 8 million barrels or let's say 4 million barrels off the world market, and we actually, that will structurally impair Russia's ability to produce, right? If you back up a system that has no storage from full production to whatever it will be, it has a major geologic destructive result on the wells. And to turn off wells and then turn them back on, or to shut them in and turn them back on, there's no light switch. This takes many years. And so if we reduce the number of barrels on market by creating these sanctions, then we're going to have crude oil prices that people are going to need a calculator to figure out. Mm-hmm. And what everyone's reacting to right now is China's closure of cities, which it never did, really. in the beginning. They said they did. They said they never really had an outbreak, and now magically they're having outbreaks when the one thing that can replace a regime or cause enough uprising to replace a regime, as you've probably seen in the past, are food prices and energy prices.
Yep.
Whether you look to the Tiananmen Square riots in 1989, or whether you look at the Arab Spring, both of those were caused by food prices. And you think about the coming famine. A third of the world's wheat and barley is produced in Russia and Ukraine. And I can promise you one thing: these farmers aren't out farming next year's crop or planting next year's crop right now. We're going to have a major food crisis in the next 12 months. And that's going to be a big problem for China.
Well, that's then there's a question which we'll get into is the puppeteering coordinated between the Chinese and the Russians, et cetera? I mean, it was very interesting to me. A client was very quick to show me, on the day of Biden's big announcement on the SPR release, that Putin was quick to shut in the Tengiz field, which was like, okay, boom, you do this, boom, I do that. And he's running a pretty big trade surplus on the stuff that he sells, right? And then he turns around, he's selling people oil and energy-related products at the highest prices we've seen in a long time, and he's selling wheat, et cetera. What do you think about that, number one? Is he, sometimes in macro at least, I think people may think there's too much puppeteering, particularly when it comes to Putin. People obviously think he's smarter than Biden, but I mean, what do you think? Do you think that he's got all the pieces moving that way? Like you're playing a global macro video game almost?
Yeah, I think there is a grand strategy, and clearly, if you look back at that February 4th joint press release between Xi and Putin, go read it line by line. They tell you what they're going to do. They talk about forming a strategic partnership that has no areas that are off limits. They talk about the strength of this partnership and the longevity of the partnership and what the partnership will and won't do. They come out and endorse each other's moves in Ukraine and in Taiwan, i.e. Russia's reacquiring Ukraine and Russia endorsing China's one China policy and the reacquisition of Taiwan, the Taiwanese separatists. I mean, you can't even make that up, Keith. But when you go back to this, to Russia shutting in a field, I'll say one thing. I have a different take on that. There has been a somewhat of a reluctance of some of the people in the West, some of the buyers in the West, to buy Russian crude, given the atrocities and the indiscriminate killing that Putin's laying on the Ukrainians. So right now, there's about a 500,000 barrel a day, let's say, overproduction by Russia, because Russia's having trouble marketing those 500,000 barrels. Yeah. And Keith, what that's doing is Russia essentially has no oil storage in its system. It uses its pipelines as storage. Mm-hmm. Well, those at 500,000 barrels a day, those pipelines get backed up. And if they back up into the fields in Siberia, it requires shut-ins. So what's happening is the reluctance, again, so not a complete sanctioning, but just a simple Western reluctance to buy some of his crude is causing major problems in his oil fields. His calculus in the beginning, my view, is he could roll Ukraine in the first week or two. Mm-hmm. And the fact that the West has I think he miscalculated on NATO's convergence instead of divergence. And I think that there are so many people and entities in the West quietly helping Zelensky push back the Russians that now he's engaged in trying to troubleshoot a problem he didn't think he was going to have. He didn't think that we'd have the balls to sanction his energy business, which so far we haven't. But that simple reluctance is causing major problems back up these pipelines. Right. So if and when we decide to sanction his energy business, we can cause huge decade-long problems on the back end, which will, again, be very difficult for China because, again, demand for crude is inelastic in my view. And it's something that the tacticians, I think, miscalculated on. But again, I don't think that the coincidence of them shutting in the fields with Biden's announcement had causal effect. I think they were different causals, different cases.
Yeah, that Tengiz field's in Kazakhstan, obviously.
Yeah.
So with that one, but to your point, your broader point, like in terms of what's actually going on here in terms of self-interest, corruption, you had an awesome tweet. The tweet that he had on April 8th, guys, that had the ex-German chancellor. That was like, most people, well, I didn't know that. I mean, let's just start with that. And what do I know? I don't know anything. But I read Kyle Bass's tweets, so I feel like I figure something out once in a while. But this is, if you could show that tweet, guys, and maybe you just link the West to the German, in this case, to the Germans, if you were trying to do that or not. I mean, it's you're the one who had the tweet.
Thank you. Well, look, Keith, I think that I did a lot on sanctions compliance in the institutional world back in 2018. And in my in-depth analysis of U.S. primary sanctions, right? Primary sanctions are easy. U.S. decided back then to sanction the Iranian Republican Guard, certain members of the Iranian leadership and terrorist networks and things like that. When we sanction any of those things, if you and I happen to have money invested, whether we are an institutional investor or family office in the U.S., you are forced to divest of those things. You may not own, support, engage, and invest in anything that is subject to U.S. primary OFAC sanctions.
Yep.
What I was thinking about back then was that if you continue to do business, let's assume you are Siemens, or let's assume you are a German bank, or let's assume you are a Chinese bank, and the U.S. has sanctioned an entity in Iran that you actually do business with, and you say, you know what, I'm just not going to adhere to those sanctions. I'm going to keep doing business with that Iranian institution that the U.S. sanctioned. You are deemed to be what's called a scrutinized entity, or an entity that the U.S. Treasury can sanction immediately with secondary sanctions because you didn't comply with primary sanctions. Well, guess what? The investing universe continued to invest in all of those companies, those scrutinizable entities. The number one country that has public scrutinizable entities in the world is Germany. So Germany does more business with the Iranians, the Chinese, and the Russians than any Western country. And so that was something that I learned in 2018. And when you look at the depth of the relationships that Germany has with, let's call it the axis of authoritarians or the evil despotic regimes of the world, it's pretty shocking. And when you look at Gerhard Schroeder, and the former chancellor of Germany, who was the architect of the denuclearization or turning off the nukes in Germany because supposedly they weren't green, and knowing that their reliance on Russian gas was going to be the ultimate end of the road for Germany. A former president of the United States, who I've had the opportunity to sit with, brought this up to Schroeder back in the early 2000s and said, do you think that, let's say, charting a course for almost complete dependence on Russian energy is a good idea? Schroeder said, yeah, we have a great relationship with the Russians. We are becoming more of a global society, and they are westernizing, and we don't think it's a problem whatsoever. Well, fast forward and you see that he's chairman of the board of Rosneft, and Gazprom added him to the board 20 days before Putin's invasion. You can't even make that up. The Russians bought the German chancellor, and Merkel went along with it. Merkel wants to have a nice, quiet retirement. And you know what? She needs to be called out. The Germans are in bed with many of the despotic regimes around the world. And if we want sanctions to be real, and we want them to have teeth, and we want people to fear the tip of our economic spear from in the West, then we need to be serious about sanctions. We need to immediately, secondarily sanction anyone that's not complying with primary sanctions. And a perfect case in point, Keith, is when Visa MasterCard took the Russian banks off of their payment networks for dollars. The very next day, the Chinese banking system put them on Union Pay, and Union Pay is processing dollar payments for the Russian banks. We haven't sanctioned the Chinese banking system or Union Pay or Alipay, and we should sanction them tomorrow.
Yeah. If you or I were running a country, that would be scary for a lot of people. Probably not the two of us, but we would use actually I like that comment, the tip of the economic spear, Like, to me, if I want to impose sanctions, primary, secondary, all the way down to, this is a Canadian hockey fight and you're not getting out of this until the refs get out of the way. Like,
Right.
It's when you're going into economic quad four. You're going into both the rate of change of your growth and inflation slowing at the same time. Your corporate profits are slowing and or imploding. What's interesting now, like, guys, if you pop up slide 20, is that the length of this incursion, and like you said, it probably wasn't in Putin's original plan, but what it's doing is that it's just driving all of Europe into what we call deep quad four, a very likely recession come the third quarter, if not the second. At what point, like, does America not understand that? Like, I mean, you can easily impose the absolute amount of pain on them at the precise and opportune economic spear time.
Yeah. So it's a great question. I think that number one, if all we were economists and macro investors, and that's all we wanted to do was make money. If that was our sole objective,
right?
Then we'd all be speaking Chinese tomorrow. Now, if we actually have sovereign boundaries and we want to think about our national security, our way of life, we want to think about human rights, and we want to think about the blood, sweat, tears, and the fights that we had to put up to get to where we are today, then you know what? When you're an economic quad four and you have to make some difficult decisions, they're not economic decisions. These are decisions based upon grand strategies and long-term planning to protect democracy in its kind of in its in situ. So I believe that everyone believes that economics should be governing the Fed and should be governing the presidency, and that we should just be hands off and let these massacres happen. I believe that you to be a true leader, we need a Churchill, right? We need a Thatcher, we need a Reagan, we need somebody out there that has the guts to make the right national security decisions and take the economic pain that we take. Again, Keith, if we impose the sanctions on Russia's energy business, which, by the way, every day we don't impose those sanctions, the West writes $800 million checks to Putin every single day.
Yeah, it's bananas.
We're funding that war machine.
And
should we stop? Yeah, we should stop. But guess what? Guess what, Keith? You want to see an economic quad four? Take 8 million barrels off the market, and you'll see where Europe and the U.S. go. And well, China will go there too. But is that the right thing to do? Absolutely, it's the right thing to do. Is it going to suck? Is it going to create $7 pump gas? Yes, it will. It's a terrible thing, but it's the right thing.
Well, we're willing to raise interest rates allegedly 9 times this year into our own slowdown. So
that's not going to happen. It's not happening.
That I know you have some thoughts on that. I mean, I know that takes it back to what we're doing internally, but it's all part of the same thing. So I mean, I don't know how you and I would not have at least one back and forth on the U.S. and the Federal Reserve's current policy path. What do you think about that?
So I wouldn't agree that it's all the same thing. Here's what it is. Now we're getting into the politics of the United States. One of the other reasons why we don't impose these sanctions is the number one knock against President Biden's administration is, of course, inflation.
Right.
But whether he should own it or not, we won't even get into. He owns it in the mind of Americans today, in the minds of Americans. The number two knock, of course, was the complete botched withdrawal of our troops from Afghanistan. So the Democrats are facing maybe the largest red wave that's ever hit the United States in the midterms. You wait until you see the outcome of these midterms. So when you think about making the right geopolitical, long-term grand strategic decision for our country, it's to immediately sanction the energy business. What that means politically is a much worse scenario of inflation or stagflation in the near term, right? Economic declines coupled with price hikes. So I think the politics of this situation are what's driving it. Now, let me go to the other side. You talked about the Fed raising rates. The Fed is raising rates, and they're being so vocal about, shrinking the balance sheet, potentially engaging in MBS sales, taking almost $100 billion off the Fed's balance sheet a month, starting here in a couple of months. at the same time as raising rates. And so the reason they're doing that is to try to aggressively kill inflation going into the midterms. And so what they can't do is drive energy prices because Putin's got that steering wheel today. And that's something the Fed in their omnipotence believes they can control everything, and they can't control energy prices. So I think the Fed is in a bad spot. I think no one in the world wants to see Trump as president again. And I think they're deathly afraid of a Trump resurging in 2024. We all hope that he sits down and lets adults play in the elections. But I can tell you right now that the Fed is in a bad spot. And I think that Putin's in a horrible spot. And, we all know the story that Putin's telling every single one of his friends since he grew up about the rat. And Putin wants to be that rat. And I think that day might be coming.
Well, on that front, and just quickly before I forget, slide 41, guys, and Kyle's tweeted about this multiple times as well, on what the American consumer thinks about all of that. These are obviously the worst consumer expectations, American consumer expectations, going back 11 years, which is saying something, and it's pretty sad, really. And thinking about that within the lens of Putin's next moves and his intentions, I have a lot of clients who come back and forth on that. Displacing the U.S. dollar as the world's reserve currency. Let's start with that one. And his recent moves, which have rightly, I don't know whether, I'm pretty sure he tried to do it, but again, have stabilized the ruble in the face of a lot of people thinking the ruble was going away. And again, I'm not saying that that's a perpetuity, that he's going to be time stamping here, but what do you think about that? I mean, you're starting to reestablish the gold standard in rubles. That's anti-dollar.
This is a successful propaganda campaign, started by Russia and funded by China. China's been buying media and social media spots all over the world and pushing the Russian propaganda. Keith, just think about this. At the front end of the invasion, and by the way, the Fed did go on tilt, and they definitely overdid it during the beginning of COVID. They printed, I'm a monetarist at heart. So when you think about 40% more M2 in 18 months was probably too much. And I believe, that's why the price levels probably moved for about 40% over the last 2 years, and maybe more in certain areas, right? There's no Gaussian distribution of that price level move. But I think when you get to a point of saying that we're going to move to a gold standard based on rubles, I think people have literally smoked too much of whatever they're smoking. I mean, when you think about the despotic autocrats around the world, you say you're not going to timestamp it. The ruble will not be a force in currency markets in the next decade or so. Even if Putin were to be removed, whether it's removed by someone else or someone internally, this world would not go back to being a kumbaya of globalism and everybody rolling to see Klaus in Davos. Those days have been proven to be over in the medium term. So I think when you get to a scenario of people talking about the dollar losing its primacy, look what has happened in the last few months. Even though the Fed has gone on tilt, where else are you going to put reserve capital? Europe doesn't have a central taxing authority, and they still have they don't even have a unified fighting force. It's still a German army and an Italian army. No one has ceded their fiscal authority to a greater power. Europe's still just an idea. People aren't going to put their reserves in euros. And Europe's going to enter they have a worse population demographic situation. They have a worse economic situation. You're going to go to Japan, who owns more than 120% of their own GDP on the BOJ's balance sheet. No. Are you going to go to China? Who trusts China? You could have a Russian situation in China in the next 24 hours. So there is nowhere else to put your money, Keith. Well, and look, Canada's a great place, but I'm worried about Trudeau and the decisions he's made in the last 12 months. And so when you look around the world, the U.S. is still the tallest midget, and I think it's going to stay that way. And you look at global flows, people have been selling China. They've been selling Russia. They've been selling some of the bad regimes of the world. They're buying US and they're buying Canada, and that's what's happening.
Well, on the currency front in particular, even the Canadian dollar has been relatively, it's one of the few currencies that's been relatively strong alongside the dollar. But when people tell me that this grand plan to debase the dollar or eliminate it as the world's power from a currency perspective, world reserve perspective, I just look at, like, guys, show this morning's chart. I mean, we're short yens against the dollar, we're short euros against the dollar, we were short rubles against the dollar. Now you can't, like, these have been some of the greatest ideas of the year. I mean, I don't know what people are talking about when they're talking about the pending demise of the US dollar. The dollar has been getting stronger in the last month since the incursion at a faster pace, Kyle, than anything that matters.
I mean, Keith, when you think about the correlation historically between, let's just say, crude oil, or you could say the commodities complex in general, when you see a big move in commodities, you normally see a concurrent dollar sell-off.
Yeah, that's a good point.
And what you saw was a major move in commodities and a major move in the dollar stronger. I mean, the market's telling you what you and I are saying. The detractors or the naysayers are the people that are really propagating dollar's going to lose global primacy and it's going to be a Bitcoin or a ruble. I mean, you have to look at these people and wonder, again, like what they've been doing for the last few days.
Well, I mean, it's always a new narrative, and it has to do with, self-interest. I mean, just trying to get the Q&A up that has all your, I mean, like, as soon as the Russian incursion happened, it's like, oh, everybody's going to buy crypto in Ukraine and use that as their new currency. I mean, it's just, perpetual narrative to wherever people are positioned. And that's, unfortunately with Twitter and everything else, that's just what we live in, this massive echo chamber. One thing that you just said, one of my favorite tweets, like I was just trying to find some of the best tweets that I think you've had. The Davos man, and you mentioned Klaus. I mean, not everybody knows well, maybe people know who Davos man is. Show the tweet, guys, that he had from March the 15th. That's a beauty. This and maybe expand on it. I mean, it's interesting. I mean, Davos, obviously, with COVID, went away. Maybe that was a blessing, the blessing of all blessings. But, what did you mean by that?
This narrative, you remember when Xi Jinping went to Davos and gave the keynote speech and talked about how China was the responsible global actor in the world? I mean, you literally sit there and you look at yourself and you say, I must be taking crazy pills. You have the guy that is committing genocide on a scale that we haven't seen since World War II. You have someone that lies, cheats, and steals their way through the world in their sole attempt to attain global primacy. You have a regime that won't submit its companies to Western audits. You have a regime that you go through every single aspect of this regime, and then you give Xi Jinping the stage and let him proclaim that he is the most responsible global actor in the world and that the US needs to get its act together. This concept of globalism is one that we all, in our hearts, we want that to be true. We desperately want that to be true. What these despotic rulers like Putin, like Xi, like Kim Jong-un, and like Soleimani and the leadership in Iran really engage in is they engage in propaganda campaigns, and this concept of Davos man being a global citizen and having their heart open and everyone playing responsibly and by the rules is a pipe dream. And these despotic rulers have just shown you how big of a pipe dream it really was. And so I don't believe that world exists. You, Keith, you call balls and strikes. What I'm trying to do is geopolitically call that ball and strike.
Well, I mean, I in as many years as I've been alive, would not think that the probability was as high as it became, that you would have again, I think of probability in terms of the rate of change of probability. So in other words, rising from somewhere, at least on my screens where I care, balls and strikes, getting markets right, somewhere near zero on World War III. Not anymore. I mean, because if you're right, Kyle, let's just say that you are. Like, I mean, I have no reason to believe that you're not right on that. They don't want to be wrong.
Well, look, at the hinges in history, at the big events, if you were to poll people a year ago and say, if Putin were to put some troops on the Ukrainian border, would he invade and turn all of Ukraine's cities into parking lots with thermobaric bombs? What percentage of the people do you think would say yes?
Very small. I mean,
it'd be sub 5%, and I would argue it'd be sub 2%.
Yeah.
Well, that's what happens at hinges in history. These are huge surprises. And you said something about people's incentives. I think that we are all invested in prosperity in one way or another. We're all you have to be optimistic to invest, right? I believe. And then where the majority of your money is, whether it's in crypto or whether it's in Canada or the US, you're going to be really bullish about where your money is. And I think that when you start thinking about the concentric circles of the potential negativity of that statement being true about Putin invading, or of the statement being true that Taiwan will surely attack, or China will surely attack Taiwan in the coming 12 to 18 months, no one wants to think about those concentric circles of negativity because of how they impact their livelihood, their well-being, their savings, investments. And unfortunately, they can't do it dispassionately. They can't do it unemotionally. They can't be pragmatic about this. They want to think that everything they've been told is true in the past, and that everything's going to be fine, and that China isn't as bad as you say they are, and that we're really just listening to the hardliners. We should be listening to the reformers. And I hear all the arguments, but in the end, Keith, what Russia just proved, institutionally, people have been investing in the MSCI indices and the globalism and the Davos man asset allocation model, and they've been doing so knowing. They've been allocating money to Russia knowing a few things. They knew that Putin created a false flag in Chechnya and then went in there and indiscriminately killed God knows how many people. They know that Putin invaded Crimea and took it. They knew that Putin has killed almost every single one of his political adversaries in a horrible way, from putting radioactive paste in people's underwear to giving them milk in London with polonium in it. We know he kills people, and yet we still invest in Sberbank because it's the cheapest bank in the world, and we need to make money, or we might have FOMO, or we have to listen to MSCI and the people that run it. And in the end, those are stupid investments. And think about how much money people have invested in China. Think about everything you know about this regime. How can anyone be a prudent fiduciary and make that investment? The only way is they just have fear of missing out, and they don't want to not listen to the index senseis. And I can tell you the indexers have the problems of their own, and they might even have a fair amount of corruption in allowing some of these countries in these indices. So I think people need to be thinking on their own 2 feet. They need to be thinking pragmatically, and they need to be worried about how much capital they have invested in a regime of a despotic killer like Putin and like Xi. Well, they just zeroed their Putin investments. And let's say they can sweep that under the rug because maybe it was less than 1% of their asset allocation, and they can just pretend it didn't happen. Even if it's hundreds of millions of dollars, we can pretend it didn't happen.
I mean, there's FOMO for one thing. You had your capital there to begin with, and there's more like FOGO, not as in the U.S. lacrosse guy taking the face off. FOGO, like fear of actually getting your money out or getting it back. I mean, that's the problem with these places, which you've documented and many have. All the way back to Red Notice, which was a great book by Bill Browder, like on trying to get your capital, a hedge fund manager like you and I, trying to get his money out of Russia. I mean, good luck. It's an amazing thing. If you don't mind, in the next 10 minutes, I want to get the Q&A from the crowd just to rattle them off. I know that there are a lot of questions, and Kyle has a lot of thoughts on these things. And the first question, one of the most highly rated questions, Kyle, has to do with that. European Russian banking, Russian debt question. Kyle, I hear no talk or concern regarding European banks holding Russian debt that could cause big defaults and losses. Does the risk of a bank blowup cause any concern?
So the answer is it causes concern. But when you think about the linkages of let's say the Western banking system, so let's just connect Australia, the U.S. and Canada for better sake. And I think about the linkages that existed during the Lehman crisis, where no one knew the extent of the notional exposure of the derivatives market, and where that could lead to bank failures and that could lead to complete wipeouts of certain banks. For the better part of the financial crisis, call it '08 to 2013, we saw the US banking system essentially recapitalize itself. We almost replaced all the equity in the system. We had about $1 trillion of equity, 17 trillion of assets on balance sheet, and we pumped in about $800 billion worth of common and preferred over a multi-year period. In Europe, they have this thing called the capital key, and the Bundesbank really runs the show in Europe, and they couldn't figure out how to bail out their call it their biggest problem children. They never really recapitalized the banking system of Europe. And so do I worry about European banks owning too much debt in Russia? Well, probably. Is it enough to wipe out the system? Absolutely not. But think about this. What if you had to take every Chinese investment you have in equity and debt and write that down to zero? Now you're talking real problems. And by the way, we are one errant activity away from that happening. If we end up having to sanction the Chinese banks, if China ends up providing military assistance or military equipment to the Russians, it's game time. And
do you think again, that those could be like, I mean, you talk about your views on a sea of political red votes coming out. Do you think that could be the political promise of the midterms that gets you to the big one? That a Republican candidate for president is going to promise these things in maybe a different tone than Trump himself?
I don't want to attach a political party to these ideas, Keith. I mean, you look at the Hong Kong Human Rights and Democracy Act. It's the only thing the U.S. politicians push through unanimously in God knows how long. I think this concept of democracy, this concept of standing with the rules-based order, is actually apolitical. And so when you look at the polling in the U.S., those that believe in the favorability of a relationship with China has moved from plus 60, plus 65 to like plus 20. And those opposed to that relationship have gone in a major way negative on both sides of the aisle. So I'm not going to say that you're going to see Democratic or Republican promises. I actually think it's apolitical.
Well, then, I mean, in that case, then there's every opportunity for those that have very low political approval ratings right now to see that and do that. I mean,
if they're smart. Yeah.
Interesting. This next question, it's got a lot of votes, and it's certainly, for the record, not the way I think about it. But I'm not here to ask questions that paint how I think. And I can't wait to hear how Kyle Bass thinks about the answer to this question. Will there be? It's not a funny question. It's a very serious question, I assume. Will there be a time this year to finally be able to buy Chinese equities in size? Post a historic market crash in the U.S., wherever that comes, do you see future market performance in the U.S. paralleling Japan in the 1990s and China markets replicating the current U.S. performance?
Yeah, I mean, I think where I stand on this. I am shocked at how much capital is invested in a regime like the Chinese Communist Party. I don't think anyone should be invested in China. And I don't think, as long as the Communist Party is standing 90 million members strong, I think you are engaging in a fool's errand, because I don't believe you'll ever get your money back if you're invested in Chinese private equity. I think that the time for China to pretend that it was going to westernize and become a responsible member of the globe, those times are gone. And so if you want to pick up a dime in front of a bulldozer and try to, quote, trade it, be my guest. My money won't be in there. And I think U.S. leadership, both militarily and presidentially, and at some point in time economically, is going to end up diverging and decoupling from China altogether. So I think you're picking up a dime in front of a bulldozer.
Well, the part of the appreciate the answer to that question. The part of the question, like the U.S. replicating Japan in the 1990s, we are not Japan demographically. We have the only of consequence in terms of size, millennial generation that is, of demographics that are a massive tailwind at our back at this point, whereas the Chinese have the opposite of that for as far as the eye can see. If anything, from here, China is going to look like Japan. It's not the other way around with the U.S. replicating Japan. So
you're right. If you study those demographic trends, I know like you have, Keith, we all knew what the line looked like in China going forward in a pretty steady decline that accelerates in 2035, 2040 because of the one China policy or one child policy. But what's happened recently and what Xi figured out, remember how he clamped down on the real estate business last year? They allowed rampant real estate speculation in China to where the average home price got to be in tier 1 cities like 35 times average income. Well, what was happening was the Chinese men couldn't afford to buy their first house when they were leaving college. So they were living with their parents in their basement. Well, the men were not having sex with women because they were living in their parents' basement. So therefore, they weren't procreating, they weren't marrying. So the Chinese birth rate, the birth rate of the average Chinese woman today is 1.2. That has to be 2.1 just to break even on population demographics. So that line that you and I both know has basically shifted so far to the left and so far down that Xi had to take matters into his own hands. So this Chinese real estate decline, this isn't a tradable, it's going to hit a low and bounce. It is going to hit a low and it's going to stay there because they realized that they made a major mistake.
Yeah, I mean, if you've sold, we went unequivocally bearish on Chinese equities, as you should anytime they're entering quad 3 stagflation at, I guess at the beginning of last year. And I was very surprised at how many US-based, particularly hedge funds, were levered long China. Obviously, you had the major Tiger Cub blow up in particular that was high profile. But that notwithstanding, it's just, again, guys, show the chart that I was showing this morning of the Shanghai Composite Index. If all you do is sell China every time it bounces to a long-term lower high, you make money. You've been doing that like at least for the year and a half, last year and a half in particular. This last question here, Kyle, I think is a good one. I certainly don't know the answer, but do you think, from Frank, does Kyle see a Taiwan invasion on the horizon, and has the response on Russia changed the calculus on that?
Yeah, I think a Taiwan invasion by China is inevitable.
Really?
If you go back and look at Xi's speech to the Politburo this summer, and you look at Putin's speeches that predated Crimea in 2014 and predated this invasion, they're all telling you exactly what's going to happen. You look at the joint communique February 4th, and you see what is coming. And Xi in his speech says his sole mission in life is the, quote, rejuvenation of the great Chinese race, unquote. It's important to understand the significance of what he's saying there. He is saying that if he fails at that recombination, what he referred to as the peaceful reunification of China with Taiwan, then he says he'll be a failed leader. So you can bet that you're going to see China take Taiwan, I think, in the coming 18 months to 24 months, because Putin has moved that clock so far forward. And again, think about what the world will look like in that scenario.
Oh my God! I mean, it's. I first think of American soldiers. I mean, do you agree with that or no?
I mean, I personally don't think we're going to put our men and women at risk of losing their lives. We still hold what I call the economic atom bomb. If we sanction the Chinese banking system, we take their ability to move dollars around off the table, their economy literally collapses in a matter of weeks. They desperately need dollars to basically buy everything they're short on a daily basis. There's no amount of pre-planning they can do to withstand that kind of onslaught economically. If I were president, I would know exactly which levers I had and whether I'm going to send aircraft carriers into the Taiwan Strait and put all 5,000 of our men and women on that aircraft carrier at risk every time I do it, or I can just absolutely kneecap them economically. By the way, to our detriment as well. That would suffer a recession in the U.S. But again, none of these decisions are easy. There is no easy button here, Keith. So we're entering a period of time into a tectonic shift or a hinge in history where we need to be thinking longer term about why we're making these decisions, these asset allocations. And so you mentioned the composite index in China. You think about the last pre-invasion, the 10-year average compound annual growth rate of that index was a plus 3.3%. The 10-year average compound of the US S&P was 14.5%. And think about the additional risk you're taking of investing in a country like China versus a country with a real rule of law and one that tries really hard to respect human rights and individuals' rights. It's a no-brainer. People have just been seduced into the tantalizing potential pot of gold at the end of the Chinese rainbow, and in the end, it's just going to be a big pile of crap.
Well, on that note, you telling it like it is, like you said, I call balls and strikes. I don't think anyone will accuse you of not calling it like it is as you see it, and that's what gets the debate going. That's what America's all about. We can have these discussions. People don't have to cancel. I don't think, looking at the numbers of this audience, there were no cancels. It was a healthy discussion. Kyle, thanks for having it with me. I appreciate it.
Hey, great to be here, Keith. Thank you.
All right. He's Kyle Bass. Up next, the one and only Mike T.